Jeffrey Gundlach said, "You ain't seen nothing yet," when referencing what's coming for America, and really that's applicable to the whole world at this time. With the economic conditions continuously worsening, there has been additional pressure on stimulus. The Fed has pushed back against calls for more. Their balance sheet is already at $7 trillion, and it doesn't have the effect many hoped it would, unless you came here for the truth, so let me unveil that for you. We are going to talk about what happens if the Federal Reserve decides to kick it up a notch, as if they haven't already gone there. We saw back in September where the Federal Reserve, and I should say last year, September, the Federal Reserve had to kick it into high gear with the whole repo crisis that was unfolding. They refused to admit it. Even until today, they still have not admitted that the financial system was failing. And then we got into the next level, because as we moved into the new year, the balance sheet had already started rising from about $3.5 trillion, started rising higher and higher and higher. They called it a technical adjustment or something to that effect, which is obviously not true. And then we had to go into the new programs, QE4, QE5, and whatever the heck they want to call it. And today, it's just normal. It's totally normal buying $120 billion of garbage every single month, all of the different programs on top of that. You know how this is really coming out in our faces now, and yet there's so much that is not understood by the mainstream. And I'm not even talking about the average person, the general public. No way, they don't even know what the Federal Reserve is if you were to ask them. But I'm talking about those in the financial world. Today we're going to talk about that situation with the Federal Reserve. I want to show you obviously what's going on with the economy. I've got the job scenario. I've got more economic data that has been piling up, and I want to cover as much of it as I can. So let's begin. As Washington delays stimulus, the Fed is running out of ways to help the economy. They've already gone so far, and yet they still try to push out this propaganda as if they haven't gone too far. It is ridiculous. They've done absolutely everything. And some of their programs, like the repo operations, they were putting out there at $500 billion, and there wasn't an uptake at all anywhere close to it because the businesses didn't want to take it on. The Main Street lending program has been an absolute failure when you look at what they tried to get out and actually what happened. There's more data in here that I want to cover, but essentially what we're looking at is a problem that the Federal Reserve is ultimately, their whole structure is going to prevent them from going any further. And that's unless, as I mentioned in the introduction, unless they go one step further. And what I'm talking about with that, let me just say it, is essentially going right in and buying up the stocks, going right in and supporting the real estate market, not by buying mortgage-backed securities, but actually going in and buying the assets themselves. That's the next step. It absolutely could happen. We never have to worry too much about the Federal Reserve and what they're capable of doing, because no longer do they have to rely on what they are bound to, what they are allowed to do. They'll just go a step around it. That's what happened earlier when they set up all these new programs, the whole alphabet soup of trash that was set up. You know that they can do it, and absolutely they will. This is an article out of Bloomberg, and I believe it's referencing Bill Dudley, and obviously a guy with so much insight into the Federal Reserve, knowing what's going on behind the scenes. It tells us a lot. No central bank wants to admit that it's out of firepower. Unfortunately, the US Federal Reserve is very near that point. This means that America's future prosperity depends more than ever on the government's spending plans. And you have seen Powell, you've seen others in the Federal Reserve basically saying that the government has to do their part. We need fiscal stimulus. They've already put out a record amount of stimulus from the government, but the Federal Reserve is saying, no, you got to do more. Everybody's saying you got to do more, and we know that there will be more stimulus, whether it comes in the next couple days or whether it's a few weeks or, however long it's going to take. We know that there will be more stimulus. There always is more stimulus when you really look at it. It comes in different forms. Maybe the package might be smaller. It might be a few hundred million, a billion, I should say, and they put it here here and they put it there, and then another one gets spent up. But what they're looking at is more specific in the details, which is a lot of people don't understand this. They say Congress can't get together, Congress can't work. Oh, it's that group, that side of the equation is bad. Oh, that side is really bad. And they talk about it in the news and people buy it because they don't know what's really going on. But if you read between the lines, there's always information in there that should never be included in these bills, but it does, and it gets passed, and that's just the way it is. There's always something more that the Fed can do. Check this out. It can push down longer-term interest rates by buying more treasury and mortgage-backed securities, or by committing to keep buying for a longer period of time. This is what they do, open market operations. They actively are pushing rates down. We know that. It's not as if it's some sort of theory. We know that that is actually the case. Most people are not aware of that. It can promise to keep short-term interest rates lower for longer. They've already done all of this, by the way. I don't know why he's talking as if they haven't. Or until inflation and the unemployment rate reaches their targets. Hey, you don't have to wait too long, because the unemployment rate, based on the way that they measure it, is actually coming up here. We'll be at that 5% goal, and that's supposedly considered full employment. Almost there, just a few more months based on the way that they're heading. It's ridiculous. It can put a specified ceiling on long-term interest rates, a maneuver that economists call yield curve control. They've talked about yield curve control and probably will do that at some point, and it doesn't really have the effects that they want on the actual real economy, but that's not the point. It's the actual point is to enrich the elite. We know that already. It can take interest rates negative, a move that Fed officials have so far rejected. And that really just shows us all of the options that the Federal Reserve has. They didn't talk about the big one, though. They didn't talk about actually buying the assets themselves, not buying the debt, not buying the mortgage-backed securities, talking about buying the assets, buying stocks. They have done so on a limited scale. Of course, what we have seen with the ETFs that they've done, but this is really leading open into a new avenue, and we'll see what happens. At the bottom here, all I wanted to suggest to you was that something that I have talked about personally, and it's that, look, they've already done so much. The effect that they are producing is going to be minimal at this point, and they could actually take additional risk in doing so. When you push the interest rates too low, what are the negative aspects of that? When you go into the negative, what are you actually going to produce? That's the worry here, and he highlights that among additional factors. If you want to read the article, it will be in the description. Just to give you an update on what's happening with the Federal Reserve's balance sheet, it has actually gone to the highest level it has ever been. I've noticed that it's been fluctuating here within this point. Right now, it's just slightly above where it has been previously, but ultimately we're just over that 7 trillion mark, give or take. What's a trillion between friends? This is all just showing you that they are manipulating this in an upward direction. And as every month goes on, it looks like this continues to grow. Just a quick update on what's happening with the Bank of Canada. They had essentially suggested that they will continue their policies as they have put in place. Interest rates, look at this, 2023 at this level of 0.25%. Isn't it interesting that they chose 2023, the exact same as the Federal Reserve? We know what happens here. All central banks are looking at the Fed and their activities, and they've essentially committed to more of this QE that they're doing. It's just a technical adjustment, as they all like to call it. Nothing is really going to increase in the total amount that they are printing, but we'll see what happens. This is basically status quo, business as usual, more money printing from yet another central bank. This article here is talking about Boeing, and you may have already seen this, but here we go. The company expects to reduce its headcount by another 11,000, including 7,000 layoffs, on top of almost 20,000 already announced at the end of the year, with around 130,000 employees, about 40% less than back in 97 when it merged. Wow. This has really been something that was not expected at the beginning of this year. And now here we are several months later, and people are losing their jobs, even though there has been a record amount of stimulus. Do you see? They've pumped this market so high, and what does it do? Well, if you lay a whole bunch of people off, maybe the companies will be seen as buying opportunities. You're going to have Jim Cramer telling you to buy Boeing, telling you to buy Carnival Cruises, because layoffs are fantastic. This article here out of the Wall Street Journal is talking about the tariffs and how they actually did not do their intended purpose for the most part. Once you put a tariff on raw material, companies have to deal with price distortion. The tariff squeezes their profits, and that can cause them to produce less, hire fewer people, or make inefficient substitutions in their production process. This is what I see all the time, where the short-term thinking is essentially, they talk about that actually, how some do benefit from it. However, you look at it in actually on the whole, and it generally isn't a good thing. There are reasons to do this. There's more fine print there. It is not so black and white, but I'm just showing you the context of this article and the effect it has on the different companies, okay? Then further down, steel producers, including United States Steel Corp, remain supportive of the tariff, saying that they helped secure the U.S. manufacturing base, but domestic steel producers that turned mattress-sized slabs of imported steel into finished sheet steel had said that they are hurting. At the bottom, this is the key right here. The government picked winners and losers here. And doesn't that ring a bell every single time? Every single time they do this, they are always deciding through lobbyists, through the revolving door, who wins and who loses. That's all for this video. If you found it informative, hit that thumbs up button. By clicking one button, you support me. Thank you very much. If you want to learn how to sell stuff online, you're interested in e-commerce, you can learn for free. You don't have to pay anything. The AmazonGPS.com. If you want to understand the financial system from top to bottom, from A to Z, you can learn everything you need to know in these two books. Check the link in the description if you want the audiobook instead, themoneygps.com. Wait, hang on, don't go anywhere. Watch this video. You definitely want to see it. Click it. I'll see you there.